Are you confused as to what's going on in the Toronto real estate market? You're not alone. There's a lot of confusion and uncertainty out there, given the noise coming from south of the border. We're going to talk today about some of what's happening because of that noise, the uncertainty in the market, what's going on with interest rates, where the opportunities lie in the market today.
Hi, welcome to the Brenda Grant team. Meet Brenda, Robin, Grace, and Kitty.
If you're looking for tips, strategies, and real talk about Toronto real estate market, you're in the right place.
Make sure to like and subscribe, and if you're ready to take the next step and book a call with us, you can use the link below.
Welcome, everybody. Thank you so much for joining us tonight. We know everybody has a busy life, and so we appreciate you joining us. I want to introduce myself. I'm Brenda Grant, and with me tonight, I have Robin Muse and Kitty Chan of our team. You can't see their pretty faces right now, but they will be up here talking to you as well. So we're going to try to keep this as short as sweet as possible. We have a lot of ground to cover. A lot of changes have happened, but we'll try to keep it as short as we can. As I mentioned, so much has changed since our last session in November. So that's why we wanted to hold another one, because there's a lot of confusion out there with what's happening in the real estate market in the GTA. There's a lot of noise out there, a lot of noise coming from south of the border. And by noise, I mean tariff noise. What happens when there's noise out there is there's confusion and there's uncertainty. So buyers have hit pause. They've stopped everything. Their fear of losing their jobs, fear of rising costs of food and goods. So basically, we're in a holding pattern right now as far as buyers are concerned. As agents, we thought that this was going to be a great spring market. We were so happy, looking so forward to it, because things have been slow for a little bit. Buyers have been sitting on the sidelines waiting for interest rates to come down. They're finally down. And the spring market is always our busiest. It's lots of activity and prices go up by about 5%. So we were really excited that the spring market was going to be here. And then it's not. Well, it is here, but things haven't happened as we thought they would. So what's happened is that, like I said, the buyers are still sitting on the sidelines because of the uncertainty. And at the other side of the equation is the sellers. And the sellers, they've been sitting on the sidelines. They've been sort of waiting as well. They've been waiting for those buyers who are sitting on the sidelines, waiting for the rates to come down, to come back into the market, which, as I just mentioned, didn't happen. Excuse me. But sellers, for some various different reasons, sellers have to sell. They don't want to wait any longer. They want to put their money somewhere else. So they're hitting the market anyway. So what this creates is an oversupply in the market. New listings are up 29% from a year ago, the highest in March since for 3 years. And with buyers pausing and sellers putting more listings in the market, at the end of March, we had an 89% uptick in the active listings in the market, which is huge. Okay, so market supply, just wanted to sort of quickly go through this slide. This just shows you where the supply is sitting. The condo market is the light blue line, and then you've got the detached homes, and you've got the semi-rows and towns. So the condo market, there's like a supply of about 6 months of inventory. The detached has about 4 months of inventory, and supply semi-rows and towns has about 3. What that means is if nothing else came to market, it would take that long, 6.2 months in the terms of condos, to sell everything that's out there right now. So again, this just shows you where the supply is sitting. But despite this, remarkably, and it is remarkable, prices have not fallen that much. Like I said, you think that because the market's down significantly, prices would be down maybe 25 to 30%. But that's not the case. They're only down about 2.5% overall, which, like I said, it's quite amazing. And this is it sort of shows, I'm just going to quickly show you this chart here. The uptick back in there in 2022 was when they were giving away money. Interest rates were so low, everybody was surging into the market. Then they brought in the higher interest rates and the prices went down. But you can see since then, since 2003, base 23, that things have been pretty level. As I mentioned, the prices haven't gone down that much. And this just shows again what happened in the 3 different sectors. So why haven't the prices gone down? It just speaks to the resiliency of our market here in the GTA. And that's why it's such a great place to invest in real estate. As I mentioned, because of the lackluster performance and sales we have right now, you'd think things would be down 25 to 30%, but they're not. And the reason for that is that I call it an event-based a slowdown rather than a fundamentals-based slowdown. And what I mean by that is that the fundamentals of a good market are still there. We've got low interest rates, we've got a good economy, healthy immigration, and a decent unemployment rate, even though we've had a few job losses because of the tariff noise. But it's not like they said, the event is tariffs, it's not the fundamentals that are the problem. The fear of tariff, the fear of people losing their jobs, pricing increase, that's what's causing the issue right now. So much of what's happening today, actually, it feels very, very similar to me. It feels like when COVID hit, when the pandemic was declared, and we had that event-based pause then as well. It wasn't based on fundamentals. It was based on something that we couldn't control, a pandemic, which we'd never seen before. Things came to a screeching halt for about 4 to 5 months. And then after that, once everything settled down, we had the two busiest years in real estate than we've had in decades. There are differences between the two timeframes for sure, but the same thing that happened in both of them is uncertainty. People were uncertain, so the buyers hit pause. So now that the election's over, we have a new prime minister, can focus his attention on tariff negotiations, and hopefully, fingers crossed, an agreement is reached soon, or at least that some of the noise dies down. Once that happens, I think you'll see the buyers coming back to the market again. And that once the buyers come back to the market, things will start picking up, prices will go up again. So like I said, like COVID, it's not based on fundamentals. We have a really strong market. So as soon as that noise dies down, we're going to be back in business again. The interest rates, one thing that people have been waiting for, as I mentioned, was interest rates coming down, and that's happened. In fact, we're probably pretty close to the bottom. So for those of you who've been watching the rates and thinking, okay, well, they're still going to come down more, maybe a little bit, but the variable rate's pretty well down where it's going to be. Maybe 2 more cuts this year. And I'm going to show you here this chart. You don't have to go through it. Yeah, we'll send you this afterwards. But what it's saying basically is that we're 2.75 right now for the policy rate or the Bank of Canada rate. That's not the rate we get when we go to the bank, but this is the Bank of Canada policy rate that mortgage rates are based on. So right now we're at 2.75. So you can see on Q4 there how all of the banks have got pretty similar ideas of where they're going to sit. They're thinking that we're going to go down 0.5 again, which is probably like two reductions of 0.25 basis points right now. And the only one that's not thinking that you see is Scotiabank. They think we're going to hold pretty steady. So everyone's pretty well saying that they think we're at the bottom. That's what all the pundits are saying, that we're at the bottom of the market right now. And in fact, there are rumblings that the fixed rate, which is a different rate, may even go up if tariffs stick and are widespread, because this will cause inflation. And one way to sort of battle inflation that the government uses is raising fixed interest rates. They have gone up minimally, but they could go up again if turn really bad. Otherwise, they're probably going to stay pretty level. They're probably down to where they're going to go right now. So all in all, it's a really, really good time to buy, especially if you're in one of these groups. First-time buyers, affordability is at its best, and Robin will talk about that in a minute. Buyers selling a smaller place and moving up, and I'll go into that, give you an example in a minute. Basically, anybody buying and selling in the same market. And those buyers who are savvy enough to be able to see that the market is down, that's your opportunity to jump in now. So this is the example I was telling you about. So if you're selling a $700,000 condo or house, for example, and maybe you take a 3% hit on the price and you sell at $679. So maybe you're taking a hit up to the tune of $21,000. But then you're going to buy that bigger place at 1.1 million, and you get the 3% off there as well. So you're getting it at $1,067,000 instead of paying the 1.1. So you're saving 33% there. So your overall net savings is $12,000. So you're ahead of the game. And because the big houses now are taking longer to sell, they're on the market a little bit longer, there's even more opportunity there. So you might be able to negotiate with your good realtor, negotiate a better rate even than 3% off, maybe 5% off, depending on what area you're looking at. So your net savings could be even higher if you do that. So looking at the sellers now, if you're a seller, I would say to sellers, now if you can wait a little bit longer, I would say wait. Some sellers have to sell, or they want to put their money into something else, or move out of the country, things like that. Then yeah, if you have to sell, you saw that prices weren't down that much, so it's not a bad thing to sell right now. But if you can wait, prices might go up a little bit further in the coming months. But I think it's going to be very soon. As I mentioned, as soon as those tariffs. As soon as the noise starts to die down, and that sort of passes through, then I think the market's going to come surging back again. Because, like I say, all those buyers have been sitting waiting on the sidelines. So now I'm going to turn it over to Robin, who's going to talk to you more about the opportunities in terms of interest rates, affordability, and incentives. But first, I wanted to say, go Leafs, go! All right.
Perfect. Thank you so much, Brenda. That was very informative. My name's Robin. If I haven't met you yet, nice to meet you. All right, so perfect. Last time we did a market update was about 6 months ago. Prices were similar, but rates were higher at that time. So it's actually an even better time to buy. Now we have the same low prices, but we also have lower rates. This is the first time in years where you have low interest rates, reasonable prices, and more government incentives all lining up, which I'm going to speak to you about. Keep in mind, some areas are performing better than others in Toronto, whereas others are just, prices are lower and they're just slower than others. So it is very micro market specific, and depending on where you live or where you're looking, it's unique to your particular situation. We're happy to chat with you about that further. So as soon as confidence returns, we may still have a low rate environment, which is great, but prices will likely go up as people flood back into the market, which we are expecting to happen with all the fundamentals in place and the affordability factor. In other words, buyers have more power today than they did during the pandemic boom or during the high rate period of 2023. And this is what creates a rare window of opportunity. I'm going to show you in this chart here just how things have changed and how prices have become more affordable, and with the lower interest rates, how much more affordable it is to get into the market. So benefits of falling interest rates. We've done a chart here. You can see April 2025 on the right, April 2024 on the left. Break it down by average price at the top. So this is this average price is for GTA as a whole. So Toronto stats would be different, York region, and again, we're happy to break that down for you. But GTA as a whole, we're down the average price about 45,000. So last year, looking at 1,152,000, whereas this year, average price looking at 1,100,000, just slightly over. Interest rates a year ago fixed, we're sitting at 5.5%. We're now sitting at 4.2%. So on your monthly mortgage payment, that could save you an average of $900 a month. You can see I've broken down 5,626 for last year from that average price, now sitting at 4,757. So again, that's where we're talking about that affordability factor. And this really shows that. Potential savings on your purchase price, 45,000. And again, as I mentioned, monthly payment is significantly decreased. Now let's go into first-time home buyer incentives. There are more incentives than ever. There are more incentives than ever. I'm going to skim over them, but we can always send you a copy of this chart as well, as it really goes in depth about each incentive. So starting off with first-time homebuyer incentive, buyers can now access $60,000 from their RRSP to put towards their down payment. If you're purchasing with a partner or someone else, you can access up to $120,000. And also, this isn't just for first-time home buyers. You can actually re-qualify if you haven't owned a home for 4 years or if you're separated or divorced. So definitely we can chat with you about that further. Really good opportunities. You have the tax-free first-time home savings account, and this is a new program. It combines benefits of an RRSP and TFSA for new homeowners. So again, really great opportunity there. Next, you have a first-time homebuyer incentive, again, government incentive, where they're basically applicants who qualify can apply to get an interest-free loan of 5 to 10%. This would go towards your down payment and in turn would, of course, lower your monthly mortgage payments, again, creating that affordability factor. Most of us know about the land transfer tax refund, but I just want to briefly go over it. So in Toronto, the biggest closing cost you get hit with as a buyer is the land transfer tax. But first-time home buyers can qualify for up to $8,474,000 on the basically on a rebate. So at closing, this would be adjusted, and you wouldn't have to have that $8,475 to put against it. It would basically be applied to your closing, and you would save that much. Lastly, you've got first-time home buyers tax credit. Government is basically trying to help offset closing costs, so you can apply to get a $1,500 tax credit. Europe. Again, something we spoke about in November at our last seminar, thanks to new CMHC changes, even buyers with less than 20% down can enter that 1 million to 1.5 million market. And that wasn't possible before. So again, really opening up the window for the 1 million to 1.5 market. Giving you an example here, if you were to purchase a home for 1.1 million, in the past, before this rule, you would have had to put a minimum of 20% down, which would have been $220,000. With this new rule in effect, you can put as little as $85,000 down on that $1.1 million purchase, which is a savings and a difference of $135,000 that you don't need, which is incredible. This is a game changer for young professionals and dual income families. There are many who can afford the monthly payments, but they just couldn't scrape up that huge down payment. So again, it's going to open up the door to homeownership for many, many people. So again, this is really showing that the affordability is back, and we have not seen this combination in years. Now, buyer confidence hasn't fully returned, so it's providing a really, really good opportunity. Often when everyone's waiting, that is actually the best window of opportunity. Always buzz in our office. We have over 1,000 agents in our office. Lots of agents are talking about investment opportunities, purchasing, getting into the market, so you know it's a good time. There are many who are still hesitant, waiting for the clear signs of the perfect moment, and what they don't realize is that it's likely as perfect as it's going to get right now. Now, remember, the Bank of Canada may drop the overnight rate, and that's what we usually hear the media talking about. But the fixed mortgage rates don't always follow the same path, as Brenda had mentioned. So it is really helpful to speak to the bank or a mortgage broker, and we have some really great contacts we're happy to introduce you to. What they can do is help you lock in at 120-day rate lock, which helps you while you're searching for a home. Basically, if you purchase within that 120 days and close, you can lock into a rate and not have to, if the rates go up, you'll still be in that lower rate. And of course, if they go down, you can lock in at the lower rate. So that's what a lender can do for you, and we're happy to connect you with those great contacts. I'm going to hand it over to Kitty now. We've all been waiting. She's going to talk about some of the really, really great opportunities in the market right now. So here she is.
It's sing Grace.
All right, thank you, Robin. And hello, everybody of Zoomland. I am Kitty Chan. So we've just heard a little bit about the general state of the market from Brenda and some of the new incentives that we have from Robin. So where do the opportunities actually lie in our marketplace? The housing market in Toronto is actually holding up despite the sales being down. Prices haven't fallen off a cliff, and there's actually a lot of great opportunities out there if you know where to look. So, there's two main product types, freehold and condo. So let's talk about freehold first. Average prices are down, as we know, but they're stable. Active listings have doubled, giving buyers a lot more choice and negotiation power. Buyers now have that ability to put conditions in their offers, like financing or home inspection. It's unlike a few years ago, where in the frenzy, where offers were coming in left, right, and center, and listings were just flying off the shelf. But this is just a generalization, and the market's a lot more nuanced than that. It's made of micro markets and neighborhoods, and every neighborhood's going to be a little bit different. Some are more desirable, some have more inventory, and that plays into their value. So it's important to work with someone who can really dial down into your neighborhood and really decipher it. And we're happy to help you know exactly which market offers the best opportunities for you. So where are the opportunities for growth, and where are the deals? Well, this is a map of the existing and future rapid transit. So if you're looking for a property that's going to have more room to grow in the future, look at this map. Look at the areas where there's going to be planned transit, because these are areas where values are going to increase. As we know, where there's already transit, property values tend to go up. So should I invest in the condo or the freehold market? The freehold market will always outperform the condo market, and that's because builders don't build any more freehold homes. They're completely maxed out of land, and the only way they can build is building up. So it's not going to be profitable for builders to build a freehold house. Turning to the condo market, just like Brenda's mentioned, there's an oversupply of condo. There's 6 months of inventory right now compared to the height where we only had less than a month. So it's a stark contrast, and it really goes to show that there's a lot of choice out there right now. So a lot of people are asking, has the condo market crashed? No, it hasn't. And that's because our fundamentals are strong in the city of Toronto. And it doesn't mean that sellers have to have these fire sales, but it also doesn't mean there aren't any great opportunities out there. You can find some really great deals in the resale market and also in the condo assignment market, which I'll talk to you about in a moment. So let's take a look at the pre-construction market. Actually, what's not happening in the world of the pre-construction market, because just earlier this year, in the first couple months, we've only sold 215 units compared to years ago where we're selling hundreds and thousands. A lot of projects are held, canceled, or converted into rentals. It's because the price of pre-con just outweighs the values of existing condos on the market right now. So why would you buy a pre-construction for $1,300 per square foot versus $800 to $900 in the resale market? Some as little as $550 for condo buildings that have higher maintenance fee. The building cost is just way too high. So let's look at the assignment sales. So these assignment sales are basically pre-construction units that were sold a few years ago, or well, they're bought a few years ago, and now that they're coming closer to being built, some of the contract holders either don't want to close on their contract, or they just want to sell it. Whatever the reason is, they want to sell this contract that they have with the builder, and sometimes at a very much lower price than they had initially bought it for. So this is a case study of a assignment sale in the Beaches of a 2-bedroom condo. It was originally bought in 2022 for just shy of $1.5 million, and this contract holder wanted to sell this contract. They tried a few times. Finally, they did sell for just shy of 1.2 million with an approximate total loss of over 300,000. That's huge. It goes to show that there's a lot of opportunity out there in this assignment world, but the issue is for you as the public, you can't see them. They're not listed on MLS. So for agents like us, we have platforms and we have access to these platforms where we can find these deals for our clients. And we've helped a number of clients purchase really great assignment deals. So if you're interested, please reach out to us. All right, so let's finish it off and summarize what's going to happen in the condo market. So in the short-term view, we know prices are going to be soft for the next couple years. We have a couple completions coming up, and this is basically pre-constructions that were sold a few years ago, and now that they're finishing, they're entering the market. So in the long-term view, we know these condo completions will eventually dry up because since no pre-cons are being sold right now, we're likely going to be faced with a shortage in 2028 and beyond. So it really makes sense to try to get into the market now when there's a lot of choice, no competition, and prices are lower, because in a few short years, we're expecting the shortage and the prices will rise.
Thanks so much, Kitty. I'm just going to hold the microphone. Hi, thanks, Kitty. Now we're going to actually go on to I'm just going to quickly summarize the key takeaways here. I know we've covered a lot of information, but the key takeaways really are that interest rates are likely at the bottom now. So everybody's been waiting for interest rates to go down. We're probably there. There's lots of inventory out there, so lots of opportunity for first-time buyers, for those moving up into bigger places, a lot of great opportunities. Some of those market opportunities are off market, as Kitty mentioned. We've got assignment sales and things like that, we'll be happy to talk to you about that if you're interested in maybe looking at an assignment. If you want to get a brand new condo and there's not one there that you like, there could be some available in the assignment market. And then the final takeaway, I think, is that once the noise dies down, once the tariff noise from south of the border dies down, I think then we're going to see the market surge again. That hopefully that spring market, which we should have had now, will happen a little bit later in the year, as soon as that sort of noise is out of the way and we start picking up, just like it did in COVID. We're thinking that things are going to go back up again. So that's basically in a nutshell what we wanted to tell you tonight. And actually, we're gonna have Kitty and Robin come up in case you have any questions. If you would put them in the Q&A for Grace right now, and then Grace can let us know about the questions, and we'll take those questions for you. And if there aren't any questions, then what we'll do is we'll reach out to you and see if you want to talk to us one-on-one, or you can call us and see if you want to set up an appointment with us, talk one-on-one at any point in time. We're happy to chat with you about your particular situation. All right, Grace, do we have any questions?
Let's give people
A minute.
couple
A minute.
seconds.
Okay, sounds good.
Maybe somebody.
How about those Leafs? We can talk about the Leafs in the meantime. Wasn't that an amazing
Oh my
game for all
gosh.
you Leaf
Oh,
fans out
so
there?
right.
Go Leafs, go. Yeah, so stoked for Friday, so we'll see what happens. Anyway,
Don't be shy, everyone.
yeah. If there's no questions, that's fine. That just means we did a great job at covering everything we needed to cover.
Hold on.
Okay, Grace has got one for us.
We're thinking of selling, but aren't sure if now's the right time. Should we sell now or wait until the fall?
Okay, so as I mentioned, the question was, should we sell now or wait till the fall? That all depends on what you're doing. Because if, as I mentioned, if you're going to be selling and buying a different place, buying and selling in the same market, I would do it now. Because as I mentioned, that example I showed you, especially if you're buying a bigger place and you're selling a smaller place, then you're going to win in the long run because you're going to you maybe take a bit of a hit on your sale, but you're going to get a bigger advantage on your purchase. So yes, it makes a lot of sense for you to buy now. If you're just selling and you're gonna go out of the market or you're gonna do something else, then you might want to just wait for a month or two and see what happens. But I think that once things start to, if those things, the noise dies down, things will really pick up. But they're not gonna go like this, like they did last time. We're not gonna see a big, huge surge in prices. I think we'll just see a gentle tick up. So I think incrementally, you might, if you want to wait until a little bit later, you might get an incremental gain. But then again, what are you going to lose in terms of what you're purchasing if you are purchasing in the market?
And just one thing to add, depending on your product type, for example, condos, we've successfully sold many, many condos in this market. And it just takes strategy, it takes proper presentation, it takes more time than it used to. So as long as you're prepared for all of those things, and that way you can navigate properly and that you're not putting yourself at risk for anything, it's really helpful and will help you move on to the next step in a strategic way. And we're happy to chat with you further about that as well.
Yeah, that's a good point. The product that is moving right now, the stuff that is selling is the stuff that's really pretty presented well. Everything's done right. If you present a property, you don't stage it properly, you don't clean it up, you don't do the minor repairs and things like that our team will actually do for a listing to get it ready, then you're going to lose. But if you prepare it all properly, you set it up, you stage it properly, it looks beautiful. Those are the ones that are selling, and
Yeah,
those are the
that's
ones that you're not going to lose any money on. And as Robin said, it's very neighborhood specific too. So we can talk to you about your neighborhood.
Next one. We're pre-approved, but the interest rate feels pretty high. Do you think it's smart to buy now or wait for a possible rate drop?
Okay. We always say to people, time in the market, not timing the market. So if you're ready to go, I would say go. You're never going to time that basement bottom. We're there. We're there. Like, as I mentioned, we might get, a 0.5% basis drop, but the fixed rates are level. And I don't think the fixed rates are going anywhere. So if you're looking at locking in a fixed rate, go now, because you could miss that opportunity. As soon as this things start going up, they're going to go and everybody's going to come back into the market. So if you're in a good position to do it now, I just do it now. You're going to be well ahead of the game if you do it now.
Yeah, and again, we're happy to give you a couple other contacts. It might be good to speak to a few different contacts for different rates, different incentives, and then that way you can kind of see what's going to be the best option for you.
We're nervous about, oh, hold on. There was two at the same time. Would you consider us in a buyer's market or a seller's market?
We're more so in a buyer's market in many areas of the city, balanced in some. That's pretty much general speaking. You could say that some areas are seller's market, but I'd say we're more in the balance to buyer's market, depending on the product and area again.
Exactly. It depends on the product, because in condos, we know it's an oversupply because that's definitely a buyer's market. But if you're looking into, your freehold homes, it could be balanced in some areas. In some areas like Leslieville, where there's very little inventory, that's more of a seller's market.
Yeah. So it's like I say, it all depends on what you're looking at. But generally, overall, it's a buyer's market. But definitely, there are opportunities. Like there's areas that are still a seller's market or a balanced market. Okay.
Thank you. And then the other one was, we're nervous about multiple offers. Is that still common or is that calming down?
That is calming down. That's what we were saying. Like right now is your window of opportunity to get in without having to deal with that. And right now you can, again, depending on what area of the market you're looking at, what neighborhood you're looking at, but generally right now you can get in with your home inspection condition. Like we've had lots of listings recently, people coming in with home inspection conditions, with finance conditions, and you can do that because you're not in the heated competition. Again, very market specific,
Yes.
as Kitty and Robin were mentioning. But yes, generally now you can do it. If you wait too much longer, we're going to be back into those competitions competition areas again, and you're going to be in this position where you're going to have to pull out all of those conditions if you want to compete.
And some of the areas where there are still, some multiple offers or different, a certain product type or a beautiful house, there a lot of them are still selling conditionally. So maybe you're in competition with one other two buyers, but you're still able to put those condition in, which is great. So that's something we can help you navigate. We have a lot of experience working in multiple offer situations because we were very active in the market in 2022 and 2021. But again, as Brenda said, it's less common now, so easier to navigate for buyers for sure.
Okay, and last question, our home needs a few updates. Would you recommend fixing things or selling as is?
Good question. That's our specialty, actually. We, as a team, we do a lot of estate sales. So we do a lot of that fixing up. And as I mentioned, that's the product that's selling right now. The beauty queens are what's selling. Yeah, the turnkey products, people that you can move in ready. So we have a team, and what we do is we'd go in and we'd talk to you and we'd say, okay, here's the list of the things that we think that you should do to make the house ready. And sometimes that can be, cost you a couple thousand, sometimes it can cost you $5. But in the long run, if you do those things and then we stage it and make it look really pretty, you're going to have a gain of $30,000 to $50,000. So for a very minimal investment, and we put all the time in, we have the trades, we have the team that goes in and does this. We take it off your hands. You're going to make a lot of money, a lot more money than you put in by exponentially.
Oh,
So
sorry.
I would say that's, have it, if you want to talk to one of us, will come over and chat with you. We can go through the house and just say, these are what are the things that we'd recommend. And this is what we would say for your particular situation that we'd advise you do with the house.
Thank you. There's one more, sorry.
Okay.
We're considering buying a rental property. Do you think the numbers still make sense with today's rates?
Yes, the numbers do. I bought one myself not too long ago. So it tells you, and agents are buying them right now. So if agents are buying them right now, then it's a good time to buy. And the reason is all the reasons that we just talked about with the prices being low and having lots of supply. Yes, you might, with maintenance fees being higher, you might cash flow negative, and you will probably cash flow negative, meaning that your expenses will outpace your income for a couple of years. Typically in a condo that happens, but that's only one part of and people focus on that, but that's only one part of your investment. The real investment is holding on to it long term and having the price increase year over year. So on average in Toronto, you get about 6% price increase year over year. So that far outweighs any kind of deficits you're going to get in your expenses over. Which is why people now. There's investors out there that are running cash flow negative, believe it or not, $500 to $1,000 per month. But they're still investing. They're savvy investors. They know that in the long term, they're going to get that money back tenfold in the increasing value in their place. Especially as Kitty mentioned, we're in a situation now where there's no pre-construction being sold, none. Yeah. So if there's no pre-construction being sold now, there's nothing going to be built in 2028. So in 2028, we're going to be faced with, instead of 20,000 units coming to market, we're going to face with no units coming to market. So prices in condos are going to go up because we're not going to have that supply that we need to satisfy the demand. And by that time, we're probably going to have immigration quotas going up again. Foreign students will be allowed back in again. So we're really, really going to be tight on inventory, which makes prices go up.
Any other questions,
Okay, anything else?
Those were really, really amazing
Great
questions. Yeah, really good questions. So
and again, thanks everybody for joining us tonight. We really, really appreciate it. And do be in touch, keep in touch with us. If you need anything from us, if you want to have a one-on-one appointment, we're more than happy to sit down and discuss your personal situation, because everybody's situation is different. And thanks again for joining us, and go Leafs go.
Thanks so much for coming. Have a great evening.
Take care. Bye everybody.
Bye.